Beyond Meat has officially re-entered the trading spotlight in a big way. The stock closed Monday up 127% at $1.47 per share, and as the session ended, it gained another 15% in after-hours trading, climbing to about $1.69. This is one of the biggest single-day percentage moves we've seen for any listed company this quarter, and it's happening without any new business updates from the company itself. That alone tells you what kind of story this is, not a turnaround story, but a momentum story. This move is being powered almost entirely by sentiment, positioning, and short interest. Beyond Meat's fundamentals haven't changed. Sales are still in decline, debt is still heavy, and profitability remains far out of reach. But that hasn't stopped retail traders, momentum players, and short-term speculators from piling in. The setup is exactly what traders look for: a stock with extremely high short interest, low price, heavy volatility, and a visible online presence. Let's go through what's really driving this, what to look for tomorrow, and how to think about it if you're playing the current setup. First, today's action was extraordinary. The stock opened around 65 cents, exploded through the dollar mark by mid-morning, and never looked back. Volume was several times its daily average, showing that participation was broad. But the key takeaway is this: there was no major press release, no new partnership, and no earnings surprise. The entire move was driven by trading behavior, not business developments. This is what happens when a high short interest stock meets retail momentum at just the right moment. Beyond Meat's short interest is still sitting at roughly 60 to 65% of the float. That means a majority of tradable shares are held by people betting the stock will go down. But when prices start moving up, those same shorts face rising losses. To avoid getting squeezed further, they sometimes buy back shares to close their positions, and that buying creates more upward pressure. When you mix that with a wave of retail buying, often coordinated across online communities, chat rooms, and social platforms, you get explosive, self-reinforcing price action. That's what we saw today. A move that started small early in the session gained energy as traders realized that momentum was shifting, and then it snowballed into a full-blown squeeze effort. The after-hours price action adds another layer to this story. Typically, after such a massive intraday rally, you might expect some cooling off or profit-taking. Instead, Beyond Meat pushed higher, adding another 15% after the close. That tells us one thing: traders are not done with this name yet. There's still belief that the squeeze could extend into Tuesday. Now, the question everyone's asking: does this rally continue tomorrow, or does it fade out like so many meme-style surges before it? The honest answer is that both scenarios are possible, and it depends on what happens in the first hour of tomorrow's session. Let's start with the bullish scenario. If Beyond Meat opens strong, ideally above $1.60, and volume picks up quickly, that's a sign momentum is carrying over. Remember, traders who are short today might not have covered everything. If they see the stock gapping up again, they may be forced to cover at higher levels. That covering can trigger another round of buying, especially if retail momentum remains strong overnight. In that case, we could easily see another 20 to 30% move early in the session. The next target to watch would be around $2, which is a psychological round number and likely to act as resistance. If it breaks that cleanly with continued heavy volume, we could see some more short-term upside. But again, that kind of move will depend entirely on flow and sentiment, not fundamentals. Now for the cautious side. The risk in this setup is that a lot of traders who bought in early today are already sitting on massive gains. Some of them may decide to take profits at the open tomorrow. If we see selling pressure in the first half hour and the stock can't hold above $1.40 or $1.50, the rally could lose steam quickly. Momentum-driven stocks rely on constant participation. Once that enthusiasm fades, prices can drop sharply. Also, it's worth remembering that Beyond Meat recently issued over 300 million new shares as part of its debt exchange. We don't know exactly how quickly those shares will flow into the market, but if any of that new supply hits in the next few sessions, it could weigh heavily on the price. That's something to keep an eye on, especially if you notice volume staying high but price action turning choppy or heavy. Another important factor is social sentiment. Retail chatter has been building all week, especially since influential market voices like Eric Jackson mentioned being flooded with requests to look at Beyond Meat. That kind of acknowledgement from the institutional world tends to validate the trade in the eyes of retail participants. But the flip side is that when the narrative cools or shifts to another ticker, the flow can evaporate just as quickly as it appeared. So, if you're watching or trading Beyond Meat heading into Tuesday, here are some things to focus on. Number 1. The opening gap. If the stock opens above $1.60 or higher and holds that level for the first 30 minutes, momentum is still in play. Number 2. Volume. This is everything in a momentum trade. If the stock trades more than double its normal volume early in the session, that's confirmation the squeeze attempt is still alive. Number 3. Intraday structure. Look for higher lows and higher highs. If the stock dips but keeps recovering, that's bullish. If it fails to bounce and drifts lower on heavy volume, that's your warning sign. And number 4. Social activity. If chatter across Reddit, X, or StockTwits remains strong overnight, that can fuel another morning push. Now, let's talk psychology. Many traders are drawn to these setups because of the potential for huge returns in a short time. But the same volatility that creates opportunity also creates risk. Beyond Meat is not a safe trade. It's a fast, reactive market play. It can be rewarding if managed properly, but devastating if approached emotionally. The key is to treat it like what it is, a high volatility, short-term trade, not an investment. If you're long from lower levels, it may make sense to take some profit on strength and let the rest ride with a trailing stop. If you're thinking about entering tomorrow, don't chase blindly. Wait for confirmation that the move is continuing, such as a break above the previous intraday high with rising volume. And one more thing, don't confuse social excitement with staying power. We've seen many short squeezes run hot for a few days and then collapse back to earth once traders move on. So while Beyond Meat could still have some juice left in the tank, the key is to manage exposure and recognize that this is likely a temporary event. Still, you can't ignore what's happening here. Beyond Meat has captured the market's attention again, and for now, the bulls have the momentum. If the stock can hold its gains overnight and open firm tomorrow, we may see another wave of covering and retail follow-through. But if enthusiasm fades or sellers take profits aggressively, we could just as easily see it retrace back toward $1.20 or even below $1 in the coming days. The takeaway is simple. The short squeeze story is alive and well tonight. The volume, the sentiment, and the price action all confirm it. But it's a knife's edge trade, incredible opportunity if timed right, and equally sharp downside if you're caught leaning the wrong way. So heading into Tuesday, stay focused, stay disciplined, and remember, momentum doesn't last forever, but while it does, it can move markets faster than logic ever could. Beyond Meat has become the latest reminder that in this kind of environment, perception can be just as powerful as reality. The only question now is whether tomorrow brings another round of fireworks, or the start of a hangover after the party.